What are the tax rules for gifting money? So let's talk specifically about the details and how you use gifting to start moving inheritance, generational wealth, and create legacy. The three things specifically we're going to talk about today. How much can you gift someone? Number two, what are your lifetime gifting allowances and how much can you really do in a lifetime before you pass? And then you have estate, tax 11.2 million is fabulous. And let's talk about who pays the tax when you gift. How much can you give someone? Let's just, I'm going to go down the facts, right? So right in here, let's go down this. 2022, you can gift up to $16,000 without any gift tax. Federal gift tax exists for one reason, to prevent citizens from avoiding federal estate tax by giving away all their money before they die. Interesting strategy. And by the way, that has moved up. In 2021, it was $15,000. So you always want to watch what year and make sure you stay current. You and your spouse can gift up to $32,000 per person per year to any number of individuals. Another way to start giving money away. If you have, say, 1,000 friends and you give them each $16,000 or $16 million a year without having to file a federal gift tax form. It's a lot of money. If it's part of your will, you might trigger a large estate tax bill sale, which is why you have a trust, so you don't land in probate. So before I go further, I do want to explain, a will is not sufficient enough. I've had so many of you new clients come and say, I already have a will, my lawyer said that's enough. No, it's not. You will still land in probate court, and that is a worldwide problem. It is not just the United States. I don't care where you are in the world, when you pass, your estate goes to the state. And if you don't have a will, and a trust up above it. So the trust is the big umbrella. You need a revocable or irrevocable trust depending on how you want to do it. And higher net worth people have both, if not every kid has their own trust. When you set the trust, there's a pour over will that's a component of it. The pour over will is for the extra stuff you forgot. Right? Let's just say you did a real estate transaction and then you passed and you didn't get that deed recorded into the entity and into the trust. It's sort of the catch-all in case you forgot some stuff and it catches it. So with the trust, when you go to probate, the state kicks it back and it's the families, and the family gets to deal with your local estate lawyer. So we have a company, Generational Wealth Systems. We have a higher backup of lawyers across the country in the United States and Canada to help you set up your trust right so you don't land in probate court. And in probate, 40 to 50% of your estate is going to stay with the state. So why would you even make $100,000 or even $50,000? You go to probate, you have $50,000 only. You only got $25,000 going to your kids because they're going to take $25,000. So I think there's a lot of discrepancy. I don't think so. I know so. A lot of people say, well, you don't make enough money or you don't have enough net worth for a trust. I think anyone needs a trust. I have a 23-year-old son getting a trust because anybody above 18, this law applies to all of them. So without a trust and properly funded life insurance, you miss the whole generational wealth package. So coming up towards the beginning of 2023, we're going to be offering our generational wealth course. We did a 3-day event, beautifully done event. We talk about the power team of 5 that you need to have in a generational wealth plan. Gifting is something you start doing as part of the estate plan. It's not the whole plan. But again, a will is not enough. So click on the link below to get an appointment with our generational wealth team and talk about what you need to get yourself set up. And for those of you that don't know how to do any of this tax strategy, or your current CPA won't let you because they actually don't know 81,000 pages of tax code, click on the link below. Again, ask for appointments. Or go to askloral.com and say, I need to talk to somebody about estate planning, gift tax. Like, ask questions. If you don't ask questions, we can't start a conversation because I don't know what you need. Because all of you have different needs and we handle a huge breadth of needs for our clients. And we have experts that can totally take care of you and make sure this is set up right. Now, let's go on to number 2. Your lifetime gifting allowance is $12.6 million per person, up from $11.2 just recently. Now, all that is, going to be relooked at with the current administration and what they're doing. And it's been as low as 2.5 like just in my lifetime. I mean, so that range, it depends on the administration and how they want to do it. But right now you can do 12.6 million per person. So each of my kids could have up to that amount. So here's what's interesting about how a lot of you just don't understand money is when you have a trust, right? Whether it's revocable or not, irrevocable means you cannot change it. You also cannot be the beneficiary of that. That's actually what you do as a generational move. But as the trust goes into a probate court, it's going to get kicked back to the family. And inside of that trust, you can have properly structured life insurance. So properly structured life insurance is life insurance that's bankable, where you can actually loan against it and make it like a bank, have its own LLCs. That's a very specific kind. There's also cash value, where you can live on the cash, you can pay into it. And the premiums, this isn't for the beginners or starters, right? This is a little more advanced. But you can, even if you only have 100,000, 200,000, you can start making those contributions, and then you can start doing non-taxable distributions back to yourself without affecting the death benefit. So if you qualify, you're younger and healthier. As you grow and you keep adding to this, I mean, you could easily hand 3, 4, 5 million to each kid because you could qualify for that much life insurance. So it's not just about the income you're making, it's what can you qualify for to load up these trusts so you actually create generational wealth. Now, would you do that with uneducated families? No. So why this channel exists, so I want you to click the subscription button and the notification and then watch it. And anyone who's going to be getting a gift or any sort of inheritance from you. Like Tom Ziegler said, there's two parts of a legacy. The inheritance, which is what we're talking about, the stuff, the money, and then there's the legacy, the values, the character, right? The mission that you leave with your family. Like, I didn't do all this millionaire maker stuff for it to just die when I die. I expect that to be a legacy that's lived on and is put into my trust with very specific instruction to keep this legacy alive for not just my kids, but their kids and their kids and their kids. Most generational wealth plans blow up in 2 years. So usually by the second kids, like my grandkids, would be it, because there's not enough education or rules or structures. I have some clients that literally make their children walk through the big table with them, or they cannot be in the trust. I mean, why would you hand any sort of money to a bunch of uneducated trust fund brats? Like, you don't. You hand it to responsible adults who have contribution back to society. So you're going to create your rules however you want. I love those conversations to help you decide what you want to do and how you want to do it. But the gifting is one piece. The trust and the life insurance is a huge piece. So be on the lookout. Coming soon, our generational wealth course is going to be coming, packaged all up, the entire journal and everything we did at that conference to help you really get it right. Because a lot of times generational wealth seminars and education is taught by an estate lawyer to just set up the trust. But then they don't talk about the insurance, the corporate structure, the corporate compliance, the corporate filings, the gifts. All of this is one big plan that has to get integrated, which is what we do so differently. So who pays the tax on all of this? Well, as a gift, it's actually a deduction to you, and you don't have to pay tax like to them because it's a gift, unless you go above the allotted amount. So you have to be very careful. And your lifetime amount, if you go over 12.6 right now, you're going to pay the tax, and it could be as high as 40%. So you need a good tax strategist with the team that puts together the trust in the entire estate plan, because they need to be monitoring through your years what you've given in gifts to them already. All of it adds up at the end of your life. So the minute you hit the I've got to go button is when all the money that was gifted and what you put in through the trust and the life insurance is going to go to them. So this isn't for the lighthearted. This isn't for the, who said this the other day? Oh, Tom Ziegler said this. He said, you know, it's not for poor people who don't want to be bothered. The middle class want to be lectured to and told what to do. And like the richest want to stay learners and stay engaged and understand all this. So if you're on this channel, you obviously are working to be a millionaire, because that's what I do, 3 to 5 years, which means you need to lean in and learn and do all these things to set your foundation up so you don't roller coaster through life and then set up a huge tax burden for those who you did all this for, to leave a legacy. So stay here, engage, share this channel with everyone who needs to be part of this conversation, and go to AskLoral.com and just say, hey, I'd like Loral and her Power 5 team, estate team, to talk to me and help mentor me and my family into a great legacy creation program. Look forward to working with you. Again, AskLoral.com is always where you go, ask a question, make a request, and we'll be back tomorrow.